Yes, thank you, SCT, for organizing the digital roadshow. Yes, and thank you, investor, for joining the call this afternoon. For today, we'll be having the discussion about PTTGC, and we'll have two main agenda, which is on our strategic update and market outlook. But before that, we have just a quick update about our business. I think maybe some of you maybe already know about our business, but just a quick recap is that we are the leading chemical player based in Thailand, and we're part of the PTT group. And our core competitive advantage is mainly coming from our integration with PTT. Which means that we have access to the ethane gas from the Gulf of Thailand. That will make to be one of the core source of our competitiveness against the other player who mainly rely on that as a feedstock. And besides that, you can see that we have a wide range of the business unit and also high degree of integration among them. And the latest addition to our portfolio now for about 3 years is our acquisition in the company called Almex, which is the leading producer of coating resin, and they have the operation across many regions in the world. So we will be showing more details about their operation in the later pages. So next I go into the key update about our business, especially during the first quarter. So we'll go into the second section about the strategic execution. In the next page, you can see that we have set some priority action that we actually began to do since the beginning of the year. And since that time, as you're probably aware about the announcement of the tariff and the subsequent uncertainty and the situation in the market that come after that. So even though the situation on the tariff is that now is on hold for the 90 days period, there remains to be the uncertainty in the market. So we think that the action that we have taken will help us in the short term and the long term to navigate through this period of uncertainty. The 3 key items that we show here, the things that we do are the first one is portfolio transformation. We're one of the earliest player to execute this, and we have more details on that in the second and the later pages. The second item is on the performance enhancement, which we target at 4.5 billion Thai baht of enhancement through cost saving and revenue initiative. Now that target has been increased to 5.5 billion. The third one is on deleveraging and asset light strategy, which we aim to achieve in order to reduce our debt level, improve our balance sheet position, and be in line with the credit rating requirements. And we just announced the target for the asset light strategy to be at 30 billion Thai baht, which will be coming from the monetization of our non-core asset. So next I'll go into more details about these key 3 points. The first one, maybe we can skip this page. The first one is on the our maybe before going into these three points, just want to touch briefly on the tariff impact. So I think we at GC, the direct impact to us is that there's no impact because we don't export any product into the US, and our main customer are based in the Asia Pacific region, right? But however, we want to monitor this fluid situation and any impact to the trade flow or any impact to our customer who are exporter into the US. So in terms of the trade flow, I think the key things that we look at is what could be the changes in the trade flow on both the product that we produce, which is mainly the polymers product, the polyethylene or PE, which we shown here, where China remains to be a key customer, right? And they do import some product from the US. So if there is a ban on or there's a tariff on the product from the US into China, how would that impact the trade flow globally? And whether there could be any opportunity for us. So those are the things that we would look at. So from there, we develop into scenario analysis and then come up with the mitigation plan for what we can do, which we are showing in the next page. That we have set up the mitigation plan in the next page, which we have the tariff war room, and we look at how to capture any market opportunity or try to reduce the risk from this impending challenges. The key thing, as I mentioned, is we want to look at what are the changes in the trade flow and whether there are any opportunity that we could capture or explore. The potential example, as I mentioned, if there are changes in product, for example, like polyethylene, whether we can explore, capture a market area which are less impacted by the trade war situation. Or beside that, we can also look at whether there's any change in the trade flow of the raw material. The key one being propane, which is normally traded between the US and China. If there is the tariff placed on the propane, that could seriously impact China's ability to produce product from the propane chain, for example, the polypropylene chain. So in that case, how can we capture any opportunity that comes from there? So those are the things that we keep our eye on and see if we can do. And beside that, we continue to collaborate with our customer, try to maximize our contract value and develop more long-term contract model so that we can mitigate from this potential impact. And beside that, we try to enhance our utility by reducing our working capital or our inventory level as well. The next page, we're going to more update about the 3 points that I mentioned about our initiative to reduce the impact from the current challenging situation. The first one is on our performance enhancement target. At the beginning of the year, we came up with the amount of 4.5 billion Thai baht as our target for cost saving and revenue enhancement. And after a period of about 1 quarter, we have started on this program, and we have increased the target for the whole year up to 5.5 billion Thai baht. So this program will come from OPEX saving, holistic optimization, where we try to improve our whole process on feedstock enhancement as well as the product value enhancement as well. And on top of that, we also look at portfolio transformation, which is to look at our portfolio and see if there is any restructuring or anything else that we can do to enhance the portfolio. So that's why we're quite confident about the target that we have set at 5.5 billion Thai baht. And in terms of the benefit to the P&L, we also already see that in the first quarter, we have realized benefit of about 800 million baht, right? And throughout the rest of the year, we expect that benefit to continue to be realized up to around 4.5 billion for the full year impact to our P&L. The next page is to update about our progress on the portfolio transformation. This also is a continuation of the initiative that we began from last year. As you can see from the timeline that back in September of last year, we decided to put Vencorex, which is our subsidiary entity located in France, into the reorganization process under the French court. And in May, on the 13th of May, the court has approved for Vencorex to enter into the liquidation proceeding. So it means that Vencorex will be deconsolidated from our balance sheet and will essentially be no longer part of the GC group, right? So yeah, this is to show that we made that decision, right? And it would help to discontinue the loss that we have been realizing from this entity, right? And from the second and the third quarter onward, that will help to improve our profit and loss as well. Overall, we expect there will be uplift to our profit and loss of about 4.6 billion Thai baht coming from the discontinuation of the Vencorex business, as well as another entity, which is actually not shown on this page, which is a company called PTT that we also ceased their operation at the end of last year as well. So the only remaining process which we show at the top of the page here is on the sales of the asset related to the Vencorex operation in Thailand and in US, which right now we're already in the negotiation process with the potential buyer, and we expect that the closing will be by the second half of this year. The next page is another key initiative that is ongoing at the moment for GC, which is our asset-light strategy. We are doing this initiative because it's a target for us to reduce our debt level, as I mentioned, in order to be in line with the requirement for the investment grade and credit rating, where they would like to see debt to EBITDA level below 4 to 5 times. So the direction for us is that we will look at our non-core asset, which means any asset which is not directly related to the production of the petrochemical or the refinery product. So those are assets that we can look to evaluate and see whether there are potential buyers or partners who are more aligned to those business profile, and then we can consider to reallocate those assets to them. So that will help us in terms of freeing up our balance sheet, but at the same time, those non-core assets will be upgraded by the new buyers or the operator who have more expertise or is more aligned with those business. And so that there will be more impact to our competitiveness or our reliability. So this will be a proof of asset that we'll look to execute over the course of the second half of this year and into next year as well. So the total target, as I mentioned, will be 30 billion Thai baht of proceeds that we will get to use for mainly deleveraging. And lastly, to finish this part of the presentation, it is to recap about our next situation, which I mentioned that they are the key platform for us in terms of the specialty chemical. Maybe if I can show you on the right-hand side of the page, which is summarizing the short-term impact from the tariff situation, which you can see that there may have been some slowdown in terms of the sales volume in the first quarter, which if you compare with the previous year is down by about 5%. And that is mainly due to the impact from the slowdown in the demand from the downstream. But we still see that the overall margin per unit from Onex remain to be the same, even though the sales volume is lower. And for that, it means that we are still confident that once the market situation improves, and there is more stability and once the market settle, and we expect that our next volume will eventually pick up as well as the EBITDA from our next as well. And in terms of the direct impact to our next is that there's no direct impact because our next mainly operate as a regional business model where they have a dedicated facility in each of the key region in the US, in the Europe, and also in Asia. So there's no direct impact from the tariff because there's not that much trading between the region. So we think that it's quite well protected from the tariff situation. And as for the long-term picture, our next is still well positioned in terms of the growth, especially in Asia region where they have set up production plant expansion in a hub model in China, which has now operated for about 2 years. In India, the hub will start to operate at the end of this year. And in Southeast Asia, we expect to make the decision on the investment within this year. So these new facilities in the key market will help our next to further drive the growth in the key market of Asia, where we still expect to see growth higher than the other region. So next, we have the quick summary on the market outlook.
Starting with the outlook, this page gives you some color about the tariff. As Khun Praveen mentioned that this day, the indirect impact will affect the commodity price. But in this picture, we have just some summary of the lately that about the 90 days pause of the US and China tariff. As you can see from the above table, you can see that ethane is on the exemption list, and the rest of the olefins feedstock will impose by 10% of the tariff rate. And for the crude or base oil, will impose by 20% rate. So on the right hand side, this is telling you about which product that China import from the US. So the China has direct import 100% of ethane. So they are dependent on the ethane for ethane players on the US. The rest for PDH unit, about 60% they import propane from US. And for the olefins products such as PE, MEG, and ethylene, and also the naphtha, they're quite reach around 10% for annual import. So this is the brief of the import volume from US, and the below is in the reverse picture. What is the products that China export to US? So you can see from the dark blue bar chart, these are much more on the aromatics end markets, which is about 17% falls into the textile end markets, and the rest falls into the home application and construction units. So basically, China export like textile, and apart from that, that would fall into the consumer and electronics. Next slide, please. So this slide is telling you about how economic commodity affect the tariff affect the commodity price. As in macro perspective, you can see that the GDP from IMF has forecast fall into 2.8% announced in April. So this will affect the fears and the consumer confidence, and even the growth of the economics around the world, that we have to be watchful, even the end market, how end market grow, and how consumer spending, that would affect the consumer sentiment in the rest of the year. And I would highlight that in the table D, in the table D, the petrochemical products has steep fall since April, after the US announced the reciprocal tariff. So that impact very much about the commodity price. Next slide. Okay, so this slide is telling you about the crude and petroleum outlook. As you can see from the above graph, the crude oil price has been falling starting since January. So we expect that the crude oil price would fall, would be at around $66 per barrel in the second quarter. These are due to the ample of the supplies, both from OPEC plus and non-OPEC plus. And even if the China still have the stimulus package that will impact the GDP growth at 5% in China, that they are targeting to grow at 5% this year. And the below is about the refinery crack spread. As you may know, that in the second quarter, there is not much in heating oil demand. So the diesel and the low sulfur fuel oil might be much lower in the second quarter, but there are some specifics in bearish perspectives, because there is a new rules and regulations that announced in the Mediterranean regions, that the IMO have announced to stipulate the rules for the low sulfur fuel oil limits about 0.1%, and GC has the product of the gas oil, low sulfur fuel oil of 0.5%. So the demand of the low sulfur fuel oil will be dropped compared to the new law in the Mediterranean regions, and as well as the new player of the Nigeria has ramped up their operation. So the gasoline product will be much more in quarter two. Next slide, please. This slide is telling you about the aromatics outlooks. This aromatic for the first one is about the PX chain. As you can see that for the second quarter, the PX chain is might be increased for the PX spread. That would supported by the control of the PX players in the market, and such as South Korea and Taiwan has controlled their operating rate and cut their operating rate about 10 to 20% since the second quarter of the last year. So that would help balance and stabilize the margins of the PX. And as well as the benzene, if the PX has cut their operating rates, so the benzene as the core products will be less in the market as well. So that would help support benzene market. but there's still some weak of the benzene price that was because of the the new supplies that enter into the market and the shift of the trade flow that would that affect the benzene market because of benzene. The South Korea is the major country to export to the US. So the South Korea has divert their flow to the Southeast Asia. So that would affect the Southeast Asian price of benzene. Next, please. This slide is telling you about the olefins chain. And the olefins chain, as Kumarin said, the price, the outright price of the PE and PP is affected by the economics. So that would affect by the indirect impact. So the much more concern is on the the how the 90 days will be unfold. So we have to monitor closely about the PE and PP price. And in terms of the supplies, there's still some supply additions to the market, but the more pressure is on the PP because the supply addition is at the same level of 6 million tons, the same as last year. So that is all of the analyst meeting, the roadshow today. Thank you very much.